Alright, we're going to get started here. This video is going to be a short video on what I use for my support and resistance and how you find these key levels on a chart very easily. I'm going to be posting this on YouTube afterwards, but if you guys have any questions, feel free to put them in the chat and I'll get to them. Alright, so the first thing we look at when we're looking for support and resistance is we look for impulse moves and dojis. So a doji, if you guys don't know what that is a small candle. They look like this, where they have very small bodies, and then you have wicks on both sides. Typically, we want them to have pretty small wicks, but it doesn't really matter. But we like them to have pretty small wicks, not like a dragonfly or a gravestone. But these are okay as well. And the other thing we look for is impulse moves. And what I mean by impulse moves is a move that is a breakout move that creates a new low or it creates a new high. Or if it double tops or double bottoms and it is testing a previous high or previous low. Those are all impulse moves that we look for. So when we find the impulse move in the dojis, this is the level we want to be looking at for our support and resistance. So what I typically do is if it's an impulse move down, I take the low of the dojis. This becomes the resistance point. The reason it's resistance is it's the last support. You can see how this was acting as support. Price is bouncing off of it. It's the last support before a new low is created. So now that it was a support and it was broken, it is now a resistance. Meaning, if price were to come back, it would hit it as resistance. It would not be helping price, it would be pushing price downward. So step one, you look for the impulse. Step two, you look for the dojis. If it is an impulse move down, you want to be taking the low of the doji. You can also take the high of the doji, but it's not as strong of a level, and it doesn't have as strong of a strike rate. So what you can do is you can take the high and maybe make it a different color or make it a dotted line or just a different style than your previous level. But right now we're going to get rid of that level. Okay, so this is the level we're watching. If we look at Bitcoin currently, look at what happened. It didn't touch this level exactly, but if we took the wick, which is another thing you can do, we took the wick of that doji. You can see here, we have impulse move down, and then we have this doji, which is the last support before the next impulse move down. If we took the wick and the body, it gives you that nice little zone. And look at where price is failing currently. We wicked up into that resistance and we were not able to break that resistance point. We just saw a failure from that resistance. So if you were using this style of trading, you would have taken a short on that test, or you would have taken a short once it tested it and was not able to break it. So that's for our resistance. Now we're going to look at support. So same thing, just on the other side of it. You can take the impulse move down. You see dojis here. And now we have an impulse move up. So what we're going to do is we're going to take, let me take magnet mode here. We see an impulse move up. We see some dojis. We're going to take the high of the doji before the impulse move up. This is going to act as the last resistance point before a breakout. We had our last resistance that was holding price down. And then we were able to break that resistance into an impulse move up. So what did we see here? We didn't see a perfect test, but once again, if we took the wick, what do we see? We see a perfect test, probably to the dollar. Let's see. It misses it by $3. It goes through it by $3, I should say. The wick is 6212.5, so 6212.5. And the low of this candle is 6209. So we see this support, this resistance, broken by the impulse. And then we see the test, and we see a move up afterwards. So if you were trading this support, same thing as with the resistance, you would have taken the trade on the test of the support, or once it tests the support and it's unable to break. So once it bounces off of it. Very, very simple, but these levels are extremely strong. So you don't always need dojis. You can also take the last candle. So if it so happens to not be a doji, you can take the last candle, or you can take the closest doji. So with this one, we see an impulse move down. We're going to take the last form of support before the impulse move down. So with this one, we're going to take this level here, the 72.59.5. This level is never tested. But if price were to come up to this level before the breakdown, that's where you would have looked to short that price action. You can also do this on smaller time frames. Let's drop it down to an hourly. Okay, so let's go back to... We'll start from once we broke out of that down, or the sideways consolidation after 4K. So what do we see here? We see an impulse move up. We're breaking a high. So we're going to take the last resistance before the impulse move up. So you can see where price was failing, push lower. This is your last resistance. That becomes where you're looking to long. And I do not think this has been touched yet. So no, this level has not been touched. We had almost a touch down here and down here, but we have not seen it just yet. Another thing you can do with these levels is, for example, we have a move up here. Let me turn off magnet mode. We have a move up, and then you see a pullback. What we can do with a pullback is we can do the same thing. We grab the last point of support before that pullback down. So we have our doji here. You take your last form of support before that move down, and that becomes your breakout level. So now once this pullback has started to push back up, look at where it failed. It tapped that level perfectly, pulled back, consolidated with the doji, and then we had the breakout candle. So same thing, just on a smaller time frame. You have a move up, last form of support, pull back. You take the low before that breakdown, the pullback. This becomes your breakout level. So once price starts to curl again, this is either going to be your resistance point for a move down, or it's going to be your breakout level or a move up. Doing this style of breakout trading will get you into trades sooner, obviously, because a lot of people, what they're doing is they're not taking this level. They're taking this level. They're taking the high before the move up. They're taking the high that's being broken. It's creating a new high. This is basically the same exact setup. It's just a little preemptive. You're taking a different portion of that candle as your point. So yeah, you might be faked out a few times. For example, if this were to come up before that high, and let's say you entered here and then it failed, you're going to get faked out on that trade. But more often than not, I have found that the strike rate is basically the same as this level, but you're getting in sooner. So your risk reward is better, your profit is better, you're getting in sooner. So you can do that same, do that same thing on the move down. So for example, this is what you're looking at on a move up. You have the impulse move up, pullback. Support is that last, or sorry, excuse me, the resistance is the last support before the major move of the pullback. So on a move down, you have the move down, pullback. You take that last form of resistance. So then when you come back, this becomes your breakout point. The only time you're going to get faked out on these setups is if it double bottoms and double tops perfectly. So if it were to come down and double bottom here, or if it were to come up and double top here, you're going to get faked out on those. But more often than not, the strike rate is going to be relatively the same. So once again, we can take this move down here. You see the move down. Last form of support would be this doji right here. So if price were to come down and break that doji level, you would be looking to short. Now, because you're getting in on a preemptive move here, you don't want to get faked out by shorting support and longing resistance. You want to make sure that that candle that is getting ready to test that level, you want to make sure that the candle that's getting ready to test that level or break that level is seeing a strong increase in volume or a strong relative strength on your oscillator or whatever you're using, like a RSI or some kind of momentum indicator. You want it to be seeing a surge in momentum. So right here we see a strong surge in buying volume come in. So that is consistent with our breakout trade. So let me see if I can find, we've been on a pretty bullish trend here, so it's going to be a little difficult to find one. Okay, here we go. Here's a good example. So we have impulse move down, pull back with dojis, and then you have this pullback here with this green candle. So what do we see? Same thing that I showed earlier. See the move down, slight pullback, and then you take that last form of support, or excuse me, resistance. Once that is broken, you would enter your breakout trade. This is a continuation trade. That's why you need to see good volume, because you're trading a continuation trade. Your level would be here. You see your pullback, or sorry, excuse me, impulse into pullback. This is the candle before the pullback, the last red candle before the green. In my case, it's pink and white. You take the high, or you can take the low, like I said earlier. Once that is broken, that is where you enter. And look what we saw here. Same thing like we saw before. We saw an increase in volume. So this pullback is a proper pullback breakout. This is a proper continuation trade because we see an increase in volume, and I'm sure if I pulled up some kind of momentum indicator, we would see an increase in momentum as well. So same thing here. We see impulse move down, pull back. So we have our red candle into our green candle. We're going to take the low here. Once this is broken, increase in volume, you see the breakout. You can take the trade on the breakout. So this would be a little different of a scenario because you do not have a doji here. So you have a strong red candle. You do not have that pullback doji. You just see it going straight into a pullback. You have a red candle straight into a pullback candle where you have that green, almost a piercing candle. Piercing candles are when they have a long bottom wick and they close about halfway through the strong candle, the Marubozu candle. So we have almost a piercing pullback here. So since you do not have that doji, you're going to take the low before the pullback. This becomes your key support. Once that key support is broken on high volume, you can take that breakout trade. So even if you entered a little late, like maybe this broke out very quickly, maybe you entered like here, you're still taking, you're putting your stop loss above that support that is now resistance. Because even if you took the trade here and it's, let's say, had a slight pullback, it's most likely going to fail on that level because it was not able to hold that level when it was testing it as support. So you are very likely to see a failure on that level if it were to pull back immediately. Let's do this in real time. If nothing I've went over makes sense to you guys, feel free to post questions in the chat. I'll look at them. So here's another thing that we see. We saw basically a fake out of this pattern. But this is where, this is like I said earlier, this is where your strike rate is going to be limited. This is the type of pattern you're going to start to lose out on, is the double bottom. So if you see our pullback here, we see our strong move down, we see our pullback. So we're going to take the low of the pullback or the high of the pullback, which you could take this high here. That is before it started to break the range. And now once it breaks this level, so depending on how tight of a trader you were, you may have won, you may have taken profit here. Let's see how big of a move this was. Yeah, that was a 1.4% move, so you probably would have taken profit on that depending on how big of a trade you were going for. Yeah, even the low was a 1%. So you may have actually won this trade. So you're either going to enter on the break of the high of the pullback here, which we saw here, or you're going to enter on the break of the low of the pullback, which we saw here. Your stop loss, as I said, would be above the levels. And then target is based on your own discretion. I could go over targets, but it would be kind of pointless because the targets are going to be based on your trading methods. I typically use these levels as my targets. Lows, highs, fractals, those sorts of things. If you're scalping, you can just use percentages. So maybe your stop's at 0.2, your target's at 0.6, something like that, 3 to 1, 2.5 to 1, stuff like that. Let's go back to a daily here. I'm going to go over what I went over in the beginning, just to reiterate. So what we look for impulse moves down, either impulse move down or up, which creates a new low or creates a new high. So for example, right here, we saw an impulse move down, created a new low. This is your local low. This created a new low. We look at the last form of support before the impulse move down. If it's an impulse move up, we look for the last form of resistance. So here is your impulse move up. This is your local high. We create a new high. You take the last form of resistance. You can either take the body or the wick. That's always up to your discretion. I'm typically a body trader. I don't take wicks unless they're being heavily respected. You take the last form of resistance. Let me zoom into this to make it easier. Before the impulse move up, or the last form of support before your impulse move down. So this becomes our range. This becomes the levels that we're watching. So we do not see a test of this level down here because this is not the all-time bottom, but the 2018 bottom, and it's the local bottom. Or excuse me, not local, but it's the trend bottom, if we will. This is the lowest point of this bear market. This has not been tested yet. So we look at this level here. Let's say we are trading right here. Let's just say this is the current price. We're going to look to short these levels. So when price makes it to these levels, we're going to look to short these levels. You would have entered on this first short here. Let me turn off magnet mode. Let me zoom in a little bit. You would have looked to short these levels because these are untested levels. You have this wick here. That would have been your first entry of the short. Hopefully you would have closed on the way down. That would have given you a pretty decent percentage. About a 3% move down. You have another entry on this upper wick here. That would have given you about another 3.5% move down. If you would not have closed, this actually created a different pattern, which I have not made a video on yet, but I'll probably make one in the future. This is a swing failure pattern. This is when you see a level, either these levels or just typical high and low levels. When you see price break through the level, but then come right back. Typically, you do not want it to close through the level. This one closed and instantly failed. If you looked at this on a higher time frame, it would still be a swing failure pattern. So you want to see it break the level and then retrace. That is a swing failure pattern. You would short, well, in this case, you would short it. If it breaks above the level and back down, you would short it when it's recovering through the level. If it's a long, so like say here, you break down and recover, you would long the level. But that's a different pattern. We're going to go over that in another video. Yeah, so you see, this is your primary resistance. You have another resistance if you would like to take the high up here. Because that's the last form of resistance before the impulse move down. If you take the wick of the doji here, that would be your resistance. So these three levels are your resistance points. You can see what happened when price interacted with these resistance points. We saw a swing failure pattern, which is very bearish. That's why you saw the dump. And then we saw a recovery from that swing failure pattern. Failure at these levels, consolidation, failure, consolidation. Then we broke, retest. What have I told you guys throughout my videos? The first test trades are some of the most profitable trades you can get. This was our first, or this actually here was the first test. This was your first test trade of this level. You have not seen a first test trade of this level until this point. You've seen a break, swing failure pattern. You've seen a failure. This is the first point you've seen a breakout into a first test. Using this same level system, you can long the first test there, which would have actually been on this candle. Stop loss, as always, below the level if you're longing, above the level if you're shorting. Target, previous support and resistance. And look what we saw here. We saw a major move up. This was the final point before we've basically exited the bear market using this system of levels. You saw the break of the level into the first test of the level. Sorry about that. I was talking to somebody. So yeah, so using these levels, you have first test trades, you have resistance trades, support trades, you have swing failure trades. I think that's all of them. Yeah, standard breakout, swing failure, first test, standard resistance, and standard support. Let me clear this. And they're very easy to spot. That's another thing that I like about using this system of support and resistance. They're very easy to spot because all you have to do, so let's say we just created this new low. Let's say we're down here or we're like somewhere in here. If I have a clean chart here and I'm just now looking at Bitcoin, I haven't drawn any support and resistance, I'm going to look at the origin of this impulse. The origin of this impulse is this right here. This is the resistance point. My method of resistance is a little more fine-tuned, so I use exact levels. If you want to be more crude about it, you can just look at like the whole section. You can take the whole section as your resistance. This becomes more kind of like order block trading. You can take the whole section, or you can use my method and just take the low of the doji if it's creating a new low. It's easy to remember because if it's creating a new low, you use the low. If it's creating a new high, you use the high. You take the low of the doji, or sorry, excuse me, you take the low point. So if it's a green candle, it would be the open. If it's a red candle, it would be the close. So you take the low of the doji, the low point of the body, or you can take the low point of the wick. That becomes your resistance point. And once again, we see the same thing happen. Failure down, impulse up, look where we failed. We failed these same levels twice, actually 3 times. Maybe even more if I zoom out. Let's see. Yeah, so basically this was your final resistance point. This was your upper range of the bear market. How do you weight relevance of a level, recency, previous touches, something else? Yeah, basically exactly what you said. So if it's been touched is the first thing I look for. Has that level been touched? If it hasn't been touched, the first touch is always the strongest. And then how recent is it? So if it has been touched, how recent is that level? So this level, we're looking on a daily chart. So this level has been touched 2 times. So let's say we're down here. It has been touched twice, but it's still fairly recent. Like, I know this is a daily, so this is a long period of time, but we're still pretty much in the same market cycle, if you know what I mean. Like, this is still pretty much the same market cycle. We've double topped on it, but we're finding support. So if we're looking at, say, this trend here, what is our level that we want to be looking at? So if we're looking at this trend here, this high or low, what resistance are we looking at? This is basically the most relevant resistance. So I'm going to look at the closest resistance, and then I'm going to look at the most relevant. So we have the closest resistance would be this. Same exact method, impulse move down. You take the low of the candle. That is your resistance. After that is broken, where are your other levels? This is your other level. I wouldn't take this because this doesn't have any dojis. I like using doji levels. I would not take this point, and it's too choppy. It's not really clean. These are clean. So yeah, exactly what you said. Has it been touched is the first thing you check. And then how relevant is it? And what I mean by that is, if let's just delete this. Let's go to, let me reset. If I zoomed all the way out here, and then started looking at these levels, it would be the same thing. So we see, here's a major breakout, impulse move up. We're going to take the highs of the dojis before the impulse move up. So those are our highs, right? So we're going to go over. Okay, here's the first touch. The first touch bounced pretty nicely, but then we broke right through it. And then it consolidated on it. So it's not really respecting these levels. These levels aren't being respected. So once these are tested and they're not being respected, I don't really need them anymore. Let's look at these other levels. We have a low here, impulse move down, creates a new low. Last form of support before that move down. If you want to, you can take the high as well. So now we're going to look at these levels. Okay, boom. This one's tested much better. This one, you could even take this high there, because that's the last form of resistance before the impulse move up. This is your impulse move up. Last red candle. If it's an impulse move up, last red candle. The high of the last red candle is your last form of resistance. And then you see the test there, which is actually the low, but same thing. Let me get rid of this one. We're going to look at these two. So these two tested nicely, and they were actually still being respected here, even though it's breaking through it. Even respected there. Resistance is there as well. Resistance is there as well. Okay, so now we're not being respected anymore. So now I'd get rid of these levels. They're no longer being respected. I mean, they might be respected if we come all the way back. So if you really wanted to leave them there, you could. But in your current market structure, you don't really need them. So now I get rid of these levels. So where is price right now? Price is around 5,000 to 4,000. So let's start looking at where I would have taken these levels from back here, which I've actually posted charts with levels from way back here into my Discord before, which you've probably seen before. Have impulse move down. We're going to take the last form of support before the impulse move down, which actually acted as a perfect first test trade there. We can also take the last form of resistance before this impulse move up started, which you would have taken probably not that red candle because it was not the last form of resistance because we broke down. The last form of resistance would have actually been this high here. or actually this doji here. So from this little cluster, this pullback, these are the levels I would be taking. And now let's look over to see if they were tested. So this impulse move down, the drop of November, didn't really respect these levels. This first candle touched it and then closed, but didn't really respect them. They were being respected once we started to pull back. You can see that actually became the exact high of this range. But once again, these levels are so old and they've been sliced through multiple times, I probably would not still be using these levels. Unless I was trading on like a weekly or something like that. I would be looking for more local levels. Which you basically see the same thing. Because if you think about what you're looking for, if I'm taking these levels here on this cluster, these levels are reacting to previous levels. And these levels are reacting to previous levels. You see what I'm saying? So as you look left, the levels that you're taking, the newer levels that you're taking, are most likely reacting to older levels. So you might as well just use the newer levels because they're most likely reacting anyway. So if I were to delete these levels and bring back the older levels that I showed earlier in the video, they would most likely be very similar. I know that was kind of a long, convoluted way to go over what I was trying to explain, but basically, overall, what I'm saying is use the newer levels because they're most likely reacting to older levels anyway. And also look for levels that have not been tested, which are going to be key levels in the future. So I'm not saying we will, but if we ever come back down, to test the low of 2018, I can almost guarantee you that this will be the first place that we bounce. Unless it's just like some ridiculous fundamental bad news and it just crashes price. If this is just a standard price action move down, this is definitely not a prediction. I'm just saying for hypothetical sense, if we started to do something like this, this would be the first place that I would look for a significant bounce on this low. Obviously, you're going to bounce off these levels too. But if we're going to test the 2018 lows, that is where I would look to be taking longs. Does anybody have any questions about these levels? I've went over these same levels before multiple times. I've done it in different ways. I've done more of order blocks, supply and demand. Right now, I'm just fine-tuning it to the dojis. All right, I don't see any questions. I'm going to go until like 8 o'clock, so we have like 17 more minutes. I'm going to show you guys the same setup on a smaller time frame. All right, so do I want to do the support or resistance? I guess I'm going to do both. Probably have time for both. Okay. So what we're going to be looking for here, let me grab my magnet mode. We have our impulse move down here. This corrects into a new low. So we're going to look for the origin of this move. The origin of this move is these dojis right here. We have a hanging man doji and just a regular doji. We're going to take the last form of support before the impulse move down. We have not tested this yet. This is one that we're going to have to keep our eye on in the future when price makes it to this level. 50.77. So I'm not going to have time to check on this video, but you guys can mark this level for the future to see if it plays out. We can also take these doji levels. This would have been your breakout level. So if you were trading a continuation move down, like I went over, I think it was the second thing we went over in the video. If you were trading a continuation move down, if your indicators were pointing bearish or your sentiment was bearish, you weren't looking for support tests, you were looking for continuation, you would be looking for a break of this level. So this first break would have faked you out. If you took this break, you most likely would have been stopped out. The second break, you would have been clean. It would have scared you a little bit, but you would have been clean. Unless you had a ridiculously tight stop loss. I highly doubt anybody is trading with a $5 stop loss. I hope you're not. So this first trade, you would have lost. Unless you had a wider stop, I guess. This second trade, you should have definitely taken profit on that piercing candle down. So I found these levels by just looking at the chart. You look for the impulse moves or the pullbacks. Impulse move. That's the low, or excuse me, the last resistance before the pullback. This is the last support before the impulse. So these become your relevant levels. This might look complicated, and I might be making it sound complicated. But if you guys look at a chart and you do this for yourself, I guarantee you would have this down within one trading session. You could do this for one day, and I guarantee it would become second nature to you. So these are the levels that I'm looking at. You have the start of the impulse move. You could take either this low or this low as your pullback level. And then if we're trading at current price, you could take the last form of support before the impulse move down. So this is your new low. That is your last form of support before the impulse move down. This is your last form of resistance before the pullback is broken. This is your last form of support before the impulse move down, along with this level. These two levels are the same. This is just one level into the future. You guys have any questions? So what are we seeing here? Last form of resistance before the pullback. We're seeing a failure. You can see price is failing. It actually broke it and now it's testing it. So we'll see if this becomes a first test or this becomes a failure. This is not considered a first test until it starts to bounce. So this can still easily be a failure until it starts to bounce. If it starts to bounce, these are the levels you are watching to take profit or for a failure. So we'll watch this live. We'll see what it does. I still have about 12 minutes, so we'll see. Do you guys have any questions about using these levels for pullbacks, using these levels for first test, using these levels for support and resistance, how to find these levels? Do you guys have any questions regarding any of that? All right, I don't see any questions, so we're just going to watch this play out. So it's actually trying to bounce here. You can look at it on a lower time frame and see what it's actually doing on this level. It's actually trying to bounce here. So look at what's happening here. We're starting to bounce. It's actually starting to get some volume as well. So this could become a first test trade. So if you were a tight scalper here, and this candle closed as the first test bounce with good volume, which it's about to. If you were a tight scalper, I don't know if I would trade this on the 1 minute. I don't really know if I like this pattern that much. But you would put your stop loss below the level. Let's see. Yeah, since this is so close, I guess you could probably put it below this low here. Because that's only what? Yeah, it's only like $5 or $10. So you could even lower it. Probably put it below that low there. But I don't know if that bounce is good enough. You saw the bounce came down right before the candle closed. But this is a very, very minuscule bounce. It's only like it's only a $1 move. So I don't know if I would actually take a trade off a $1 bounce. You'd have to be a very degenerate scalper to do that. One thing I can go over, this doesn't really relate to the topic, but this is a really good pattern to look out for in the future. If you guys don't know what this is here. If you see a impulse move down like this on really high volume, let me hide this volume bar here. So if you see a very strong candle downward here, and you see it have a very long bottom wick, and then you see it followed up with a green candle that closes at the 50% or higher of the down candle, so of the red candle, this is a very good reversal setup. Especially if you have high relative volume, which you do. So we have high relative volume, red candle down, very long bottom wick, into a green candle that closes above the 50% of the body of the red candle. This doesn't relate to the support and resistance. I'm just giving you guys a little tip. This is a very good reversal setup. How you would trade this, depending on your risk profile, you would take it when the candle closes, or if you're very risky, you could take it as it's breaking the 50% of that red candle. I typically wait for the close. You would take it as it closes. Your stop loss would be below the green candle if you're a tight risk profile. If you have a wider risk profile, you would put it below the wick of the red candle. And then you would target the levels before the impulse move down. You would target these levels here. Just a small little tip. This is considered a piercing pattern. This is a piercing pattern. You saw the same thing here. Big move down, strong wick down, high relative volume. You have to understand, when you see a strong bottom wick, even if it's a red candle, and you see high relative volume, that does not mean there is a lot of sellers. That typically means there's a lot of buyers. Because if you see a candle push downward, but then it wicks up and it has a long bottom wick, that means that price was not able to remain at that low level. Buyers believed that this was a good price to buy whatever it is you're looking at. So they believed that Bitcoin was a good fair value below 5,000. So when it wicked below 5,000, it got bought up. That's what the volume's coming from. The volume's not coming from the sell side. Typically. Sometimes you can see this pattern play out and the volume was from the sell side, but typically when you see a long bottom wick, that means the volume is from the buy side. Same thing in inverse. If you see a long top wick, that typically means the volume, if it has high relative volume, it means the volume is coming from the sell side. But okay, so same thing here. You see the long bottom wick, 50% of the candle. You want to see it close or break above the 50%. This one closed just below it. So you probably would have waited until that next candle. And then once that next candle broke that 50% of that body, you would have taken the long, stop loss below the green candle or below the red candle, and then you target the previous levels. So we have 5 minutes left. Okay, so this first test actually failed. This first test was not strong enough. And then you saw the breakout. But like I said, if you were an extreme scalper, you may have taken that. But that's only a $1 bounce. That $1 bounce is not really, I don't know if that's strong enough to be considered a first test trade. It wasn't even a first test on the 5 minute. So if you're a 1 minute trader, you might have lost that. 5 minute trader, it's not breaking the level. So where you would be looking for this to bounce, you see this impulse move up, creates a new high. This consolidation becomes your high, breaks up, new high. That's the last resistance before the new high. So if you're trading this break here, which is not a very clean break, so I probably wouldn't have traded this. But if you are trading this, that would be your target, which is only a $15 move, so not very good. You can tell trading these patterns on a higher time frame is going to be much better than trading these patterns on these lower time frames. When I draw these levels, I typically never draw them on a 5 minute. I would almost never draw these levels on a 5 minute. It's just too choppy. I think the lowest that I would draw these levels and rely on them is an hourly. You can do them on hourlies. You can do them on 4 hour dailies, obviously. If you're a scalper, you can use them for small time frames, but it's just they're not really reliable. If you're a scalper, what I recommend doing is draw them on a higher time frame and then use them on the smaller time frame. Don't draw them on the smaller time frame. So for example, if I saw this impulse move down here, and then we saw the other break, you would take that low. So then if we're looking at this on a lower time frame, you can see how it's reacting on a lower time frame. You have a bounce, you have another bounce, failure, basically a first test, and then a breakdown. So draw your levels on higher time frames if you want to trade on a lower time frame. Do not draw them on a 5 minute and try to use them on a 5 minute. That is not recommended. I think that is about all the tips I have for these levels. I think I've gone over everything. First test I went over. Breakdowns, breakouts I went over. Pullbacks I went over. What is considered a relevant level I went over. Using levels on certain time frames. Yeah, I think that's just about it. So locally, you can see we have a level being tested right here. So look where that bounced. We have impulse move up, pullback, the high before the breakout. So we have another breakout. So let's say we're up here. We did not see this red candle. We're obviously looking at this in hindsight. So if we're looking at this pattern and we're like, okay, how would I have traded this? If I see this exact pattern again, how am I going to trade it? That's how you're going to trade it. Impulse move up, pull back, breakout. That is your level. The last resistance before the impulse move up. That becomes your level. Same thing. If you see this pattern, but on a bearish a bearish case, if we saw this pattern here, impulse move down, pull back, last resistance, or no, sorry, this would be like this, because we're looking at it inverted. Last support before the next move, that becomes your resistance. You can look at this on a lower time frame. So this was a perfect mesh, a perfect confluence of multiple setups that I've went over already. So this piercing pattern that we saw was testing a level. Same thing here, piercing pattern, testing a level. So both of these lined up perfectly. So if you were scalping this and you had this level drawn on the daily and you were just waiting, you were sitting there at your screen waiting for this to happen, that would have been a perfect entry. If you didn't get in on the test, you could have got in on the pierce and you could have traded the scalp. If you got in on the test, I would probably hold this for more of a long-term setup. But if you didn't get in on the test and you got in on the pierce, you could trade it for more of a scalp setup. All right, guys, that's the hour. That's 8 o'clock. We did just see the daily close. The daily closed bouncing off that level. So as long as this level holds, we're still looking bullish. I don't know if this is done with its move down, honestly. I could easily see it testing this lower level here around, what is that? Around 4,900. I could even see it really testing this lower level here around like 48. But if today's candle closes above, let's say the 50% or around the 50%, this could look really bullish. So I would keep an eye on the 50% of this red candle here, around there, which is that low. And I would keep an eye on this level. This could become like an accumulation range. Or excuse me, a distribution range. Or it could break out of that and try to test a new high. It could turn into like a head and shoulders. But yeah, keep an eye on that low right there before that impulse. And keep an eye on this high before that impulse. If I had to give you exact numbers, let me grab my magnet mode. 5184 and 4980. And if this 4980 is broken, look for the low there. But all right, guys, if you guys don't have any questions, I'm going to call it on that. I will be streaming tomorrow. I'm going to be streaming every single day. I'm going to try to stream every single day for a year. Today is day 4 of that challenge. Tomorrow will be day 5. So if you guys want to come back, I will be streaming. What's tomorrow? Friday. I don't know, actually. I have no idea what time, but I will let you guys know on Twitter. I'll let you guys know in Discord. I'm not entirely sure, but I'll let you guys know tomorrow. If you guys want to come back, I will see you then. If not, I will see you another time. Hope you guys enjoyed this video. Hope it helps you. If you guys have to watch this video over and over, I am going to post it on YouTube probably either tomorrow or Saturday or Sunday. And if you're a sub, you can watch it in my past broadcasts until it's on YouTube. But all right, guys, I'll see you later. I'll be back tomorrow. Have a good one.